Hello everybody, thank you so much for checking in. My name is Q from Hyperstocks and I am making this video today to go over Ethereum and Bitcoin to talk about significant levels of support and resistance that we're going to look for, and also what our outlook is for crypto in general for the coming years. So if you do not know and if you have not felt the wrath of the last correction, crypto markets are falling apart and so is the stock market. Most people are projecting a big crash. However, we are still mostly in correction territory when it comes to the stock market. However, we are technically crashing as a crypto market. So corrections are usually about 20%. Crashes are going to be anything that exceeds 20%. And as we all know, Ethereum has been cut in more than half in the last 2 months of trading. And that happened right after the Feds announced that they would be raising interest rates. Now, we do not have enough history to suggest that crypto markets are necessarily a market that moves with interest rates, such as the stock market does. So we are discovering these things together, and we're discovering what makes crypto markets tick together, because in reality, crypto assets do not have any fundamental value to them. Yes, there are arguments to be made like the Ethereum network and the Bitcoin network. However, in reality, there is no actual financial backing to crypto markets. Ethereum had a very strong year in the last year or so, significantly moving between 2021 and 2022. However, at the start of 2022, we can see that we hit this double top right around that $4,800 mark, making that our resistance, in which pushed us back down. Now, since then, we had a support at $4,000 that was broken. We had another support at, it's going to be $3,600 that was broken. And then we had a support at $2,800 that's broken. Now, our next strong support is going to be right down here at $2,000. The market has not been inverted yet. If we do come down below these levels, then we start to worry about a potential inversion, and falling below 1600 would put us in the highest risk territory, which is between $800 and $1,600. If we were to fall into this rectangle here on Ethereum, it will take us a very long time to recover from it, because Ethereum would then have to consolidate at these lows for months and potentially years to come before it can ever climb back to retest that $4,800 mark. Now, what we do know about crypto markets is that when they move quickly, and when there's a lot of attention, there's a lot of momentum. So it's not unlikely that in the very near future we see a very strong turnaround, and we potentially could see a bounce back to that $3,600 to $4,000 mark. If we were able to close a few strong candles in this box right over here, then we are in good hands. If Ethereum can make it back into this box between 2,800 to 3,600, then we can potentially consolidate over the next few months something that looks like this. We bounce back and then we come down, something like this, before eventually in the later part of the year testing for an all-time high breakout. However, if that's not the case and we continue to spiral down, we are going to enter the very risky territory of $800 to $1,600. Now, keep in mind one thing to look for when you are looking at any sell-off or any strength of a sell-off. To measure the strength, you want to look for one, volume, which volume on the selling side has been significantly stronger. You can see that all these red bars mark very strong selling trends. And one other thing to focus on is going to be the relative strength, or the RSI. So when we're analyzing the previous part of the chart, we can see that the relative strength on this high right here, compared to, when we compare the high of the chart to the relative strength, very strong. So that's a good signal. We came back down. On the way back up, we also had strong relative strength, also another good signal. However, on our third high, on the attempt to break above 4,800, when we move nearly vertically, any vertical move on any chart is going to come crashing down just as hard as it's gone up. And that's just because markets don't like vertical moves. They're usually just pumped and then followed by a dump. And so When this vertical move happened, a very significant divergence happened on the RSI. You can see that the stock or the chart made a higher high. However, the RSI made a lower low, which when it comes to crypto markets, they follow technical analysis a little bit more in correlation, only because fundamentals don't drive crypto markets as much as the stock market does. So when we're analyzing the technical analysis and we see this negative divergence, which means this high had much lower strength than this high, then we had already seen a pullback coming. Now, nobody really expected the pullback to be as severe as it is. However, the pullback unfortunately proved to be true. It proved to be a more of a correction rather than just a pullback. So now that we've established that that $2,000 is going to be our next support, 1,600 is the following one, and then 800 is going to be the more critical one, we need to bounce back into this range for us to potentially come back up. Let's look at the Bitcoin chart and let's see what it's doing here. Bitcoin also following a rut. You can see that here we are kind of creating the same pattern that we saw on the very last correction that we had on Bitcoin. We came down significantly. Here we're coming down significantly again. Relative strength is also very strong, so it's going to be a hard climb back. But as I said, the one thing about crypto is that when it bounces back strongly and with strong momentum. So with Bitcoin, as long as we maintain this $28,000 support, then we are in good hands to eventually bounce back. But if we were to break below $28,000, then we will be in trouble. So the idea for Bitcoin is to follow the Ethereum path that we just spoke of. We want it to bounce back and begin consolidation between 44 to 52K before eventually testing for all-time highs again. And once again, just so I can drive the point home, again, negative divergence on Bitcoin was very clear when it tried to break out into all-time highs again. We can see that Bitcoin here made a lower low on the RSI versus a higher high on the chart, which signaled a potential pullback. So going into the year ahead, we're still very bullish on Ethereum and Bitcoin. You guys have to be a little bit more lenient when it comes to these cryptos, because at the end of the day, this is a very new and very uncertain market, but the use is proving to be there. We have NFTs. We have OpenSea right now getting valued at a $10 billion valuation. We have the crypto arena that's taken over the Staples Center. So crypto is here to stay, but a lot of coins are going to fall off. So your Doge coins, the coins that really did not make a name for themselves and do not have actual use, you can see that they're hype coins. You don't want to be caught in a hype coin for too long. You want to stick to the stronger sides of the market when it comes to any emerging market. Obviously, we know that there's use to Ethereum. Obviously, we know that there's use to Bitcoin. Therefore, most of the capital should be going to those coins instead of putting money in high-risk, brand-new altcoins that don't really have use and are moving strictly on hype. Those coins are meant to be traded. These coins are meant to be purchased and held for a long time as a high-risk investment in any given portfolio. But crypto still holds the risk of not actually having a valuation. Therefore, a crypto portfolio should not be the majority of all of your investments. Diversification is still going to be your best friend between moving your money into crypto, stocks, precious metals, oil, all the following. That way you have a fully balanced portfolio rather than just a crypto portfolio, because in the event of a crash, you do not want to turn upside down and you do not want your money to just kind of disappear due to uncertainty in specifically the crypto market. Either way, we're still bullish. We do find Ethereum to be the most attractive coin to invest in, and we see the most upside considering the use of it in the NFT world and what's going to be known as the metaverse.